Good morning. It is Monday morning, April 29, 2024. It's 10:51 on the East Coast. This is Rob Sin at CEO Technician on X, at Goldfinger on CEO.ca, and you're watching Goldfinger Capital on YouTube. A lot to get to today, and I'm going to pack a lot in here. I'm going to pack in even my trip out west in this video. So feel free to skip around and watch some and come back later. I just figured it was better to just put it all in one video and timestamp it and give people an opportunity to dig through it on their own schedule. As always, if you find value in my content, if you like this video, please hit the like button, subscribe, follow me on the socials. So we're going to start macro as we always do, and then delve into the micro, including some commentary about what I've been doing the last couple of weeks because I've been traveling. Um, I was in Arizona and then Las Vegas and up to Reno and looking at some projects in Nevada, the Walker Lane trend. So we'll start with the broader equities market. And this commentary from Fundstrat sort of aligns with my thinking that we had this dual fears of inflation, resurgence, and conflict in the Middle East. Um, what was it? It was less than 2 weeks ago that there were warplanes bombing Iran, and we thought that this could be a major, type of escalation, bombing the nuclear plants and key infrastructure near Tehran. And that proved to not be the case. It was more of a sort of a warning shot from the Israelis, and things have settled down significantly since 2 Thursdays ago. Um, and yeah, I mean, just stick with the trend. We've had a correction. It could be over. We might need to sort of form a bottom, like come back and retest this 495 level in SPY. I don't know, around 5,000 on the E-mini S&P. That's a big number, obviously. And that low was made. I think the futures low was 49.60 on the E-mini S&P. That was made on that Thursday night with the Israelis bombing, Iran. So no accident there. The timing of that low, and we've been moving up steadily since then. So we're, I think, bull markets climb a wall of worry. I think this market is no different. We're climbing a wall of worry. So odds favor being long here. Looking at the dollar yen, you guys see what happened last night? Okay, this is from last Friday, and then the move accelerated overnight, Sunday night. As these moves often do, you'll see, we see this in metals all the time as well, where let's say gold will be in an uptrend when the market closes on a Friday. When it reopens on Sunday in the overnight future session, it will continue to extend its gains, squeeze certain market participants out, get really overextended at a major level, and then reversal happens. And this is exactly what happened in the dollar yen cross last night, with this move up above 160 and then reversing down to 154. We're working our way back up again. Clearly, this is BOJ intervention. Okay, clearly this is central bank intervention in the yen. Look at the daily candlestick, but also look at the trend. So all throughout this trend, there have been shakeouts along the way. This is probably no different, but the trend is relentless and quite pronounced. So I don't have any magical take on the yen and what it means for the world, but clearly, this is getting to be some sort of breaking point um, in the Japanese currency, or we're getting very close to a breaking point. Gold technical. So is this a bear flag or a refreshing consolidation. So looking at this chart, daily chart, first of all, this is not big enough. It's not, enough days yet to really call it a true flag pattern. And I think that context is really the key in technical analysis. A lot of people just want to throw out chart patterns without actually adding the context. And the context is, well, where are we coming from, and what is the trend, and what is actually happening here? So this is a very powerful uptrend, and we can look at this uptrend on multiple time frames, right? Multiple time frames, so daily, weekly, monthly, and all of these time frames show a very powerful bull market. So in the context of a powerful bull market, we'd rather not be looking for bearish patterns. That's probably not going to work very well, just probability wise. In a powerful bull market, you should be looking for bullish patterns. You should be looking to buy pullbacks, not trying to short. Um, Now, that being said, if we zoom in on a shorter time frame, you could sort of make a case that this is a flaggish pattern that has formed here in the last week. You had this big blow off move on Friday, April 12th, the big reversal day off 2448. Then a lower high was put in the following week on that, Israeli bombing of Iran. And then we flushed all the way down to 2304 and we're bouncing back. So far, this is a pretty weak bounce, but we have to understand that um, it's normal after such violent price action for a market to settle down and base out for a couple weeks. And I think that's what's happening in gold. I really think that's what's happening in gold. I would prefer to not call this a bull flag, but what I will say is if we get to Wednesday, Thursday, or certainly Friday, and we're still, um, just trading in this 2340, 2350 area, that would probably not be a great sign. Okay, the fact that bulls can't take it back above 2360, that would not be a great sign. But right now, I prefer to give the benefit of the doubt to the bulls in gold, and let's see if it can hold above 2300. Okay, break down under 2300, and then the bears are going to have a field day, and they're going to say, yep, we were right. This is a bear flag. That was the blow off. This is a lower high, and this is a bearish consolidation to trap some more bulls in, right? But this is what technical analysis is. You don't look at a chart and have a crystal ball and say, this is what's going to happen next. The only people that do that are complete jokes and frauds. Okay, you just don't know the future. We have a roadmap of where we've come from, but we don't have a crystal ball roadmap for the future. Okay, it's a probability game. And I would say probabilities favor higher over lower. So I would say 60-40, 2400 before 2299. Okay, but as always in every video, I say strong opinions, weakly held. So let's talk about the bullish percent index. Where is my bullish percent index? Okay, it's here. A lot of commentary about gold miners and this BPGDM. So first of all, it's not a sentiment indicator. It's not a sentiment indicator, any more than just, looking at any stock chart as a sentiment indicator. Obviously, if a chart is straight from the lower left to the upper right, you'd say, well, the sentiment is bullish, people are buying it. Duh, right? But this is not a sentiment gauge per se. It's a gauge of breadth. It's a gauge of breadth among the gold miners. Okay. So basically, 82% of stocks, of gold mining stocks, are on a point and figure buy signal. So right now we're having a bullish breadth in the gold miners the last few weeks. The breadth has turned from very bearish last October with most gold miners on a sell signal to now 4 out of 5 gold miners being on a buy signal, right? Now, I also see a lot of people saying, well, when the BPGDM gets above 80, it's a sell for the sector. You never want to hold because look at what happened in April 2022. Look what happened in April, May 2023, yada, yada, yada. Okay, that's a very simplistic and wrong analysis because look at 2020. The BPGDM got above 80 in April, gyrated around a little bit, but it stayed near extremes for several months. So while the breadth can be very bullish, stocks can continue to make higher highs. So it's definitely not a short signal, that's for sure. And if it's a sell signal to you, then you're going to leave a lot of profits on the table because the BPGDM has been over 80 for a couple of weeks, but look at AEM and a lot of other gold miners. Like look at that Newmont move last week. So you would have missed that entire 12% day in Newmont and really more like a 20% move from low to high there last week if you just blindly said, well, the BPGDM is above 80, so you can't hold any gold mining stocks. That's exactly the wrong thinking. In fact, you want to own them when the breadth is bullish. I would say that when this gets to an extreme, so I mean like above 95, now you're getting closer to a sell signal. But there's no single indicator that works all the time. You have to use an accumulation of the evidence. You have to use 4 or 5, 6 different indicators, put them together. When they all tell the same story, that is when you have a strong signal, not with just one indicator, okay? Or one chart pattern. One indicator, one chart pattern, one moving average, one candlestick, meaningless. It is noise. You have to look at a data set. You have to put together different pieces of information and paint a full picture. So a lot of people use the BPGDM incorrectly. I've seen all kinds of poor assessments from, oh, it's a sentiment indicator to, oh, you buy it when it's low and you sell it when it's high. No, when the gold miners have been trending lower, that has gone down to 20, 15, 10, and they've kept going lower. The same thing on the upside. It gets to 80, 85, 90, and overall, stocks keep going up, okay? So let's get rid of that. We talked about the S&P. Tesla is like Dr. Jekyll and Mr. Hyde. Look at how this capitulation happened a couple weeks ago down at 140, and look at the reversal. This is a powerful reversal, very powerful. If you can hold above 180, it's a very bullish sign. Definitely something to make note of. I have no position in this, but the power of this move is definitely on my radar now. We talked gold bear flag, stick with the trend, and I'm going to talk more about this in a little bit. BHP and Anglo American. So this is big news for the mining sector. BHP wants to buy Anglo American, and they want to buy Anglo American for their copper assets in South America. Period. End of story. It's not more complicated than that. There's a lot of diamond assets and coal assets, and BHP has little interest in those. This is all about copper and getting the biggest market share in copper mining, globally. So with this acquisition, if it goes through, then BHP will overtake Freeport-McMoRan as the #1 copper producer by a wide margin. It'll be interesting to see how this plays out. But notice how Anglo stock keeps moving up, even though it appears they spurned the offer. People are thinking that there's going to be another buyer to come in here and outbid, or there's going to be a bidding war, right? But that is very interesting. And this is copper's 462 this morning. So The biggest mining company in the world is telling you that copper is the future and copper is going to be a key to their future growth and profit margins. So, and that has a lot to do with what you're going to hear me talk about later in the video in my trip last week. It's all about copper, right? And I went to visit copper projects out west for this reason, right? We want to skate to where the puck is going, not where it is right now. And I think you could argue, well, copper is where the puck is now, and it's also where the puck is going. So this is big news. This is like a $50 billion acquisition, probably. When it's all said and done, you include the debt and everything. That's big for the mining industry. I mean, that's big. Like $50 billion is big money, and it reemphasizes the point that the world needs to invest at least $150 billion in new copper production over the next decade to even have a chance at rebalancing the global copper market and not having it in major deficit. Okay. So we'll see how that plays out. That's going to be very interesting to watch. Now, so my themes all year have been copper and gold, copper and gold. There's no reason to deviate from that just because both metals have had a very nice move in the last couple of months. We want to really keep our eye on the ball here, not get too distracted. Interest payments on the annual debt are now at that $1 trillion mark, and they are rising, right? Um, If the Fed stays stable at 5.5% Fed funds rate, then this that then this interest on the debt balloons to 1.7 trillion next April. So 1 year from now, it will be 700 trillion more. The pace is accelerating. It's just math. It's math. We're in a debt spiral, debt bomb, call it what you want, but it's math. The interest keeps accruing and compounding, compounded interest, but not the good way, like in a bank account or in a savings account or in a 401k. It's the bad way, debt, more and more debt payments, debt interest. Um, and so, really, this chart helps to explain why the Fed needs to cut to save the US taxpayers $500 billion a year. They need to cut 150 bips. So this is why, this is just in one chart why the Fed has to be dovish even when there is evidence that they shouldn't be dovish. So this is just showing you the acceleration of the debt, right? Like in the early 1960s, the national debt was nothing, right? The US was in a very strong position, including with having massive stockpile of gold, right? That was accumulated in the 40s, 50s, and then in the 60s, and then started to be drawn down in the late 60s due to the Vietnam War. But the US has added 11 trillion in debt since 2020. That's less than 5 years. Less than 5 years, 11 trillion. So we're at 34 trillion and change right now. We were just at 23 trillion. So now extrapolate that. What will it look like 5 years from now? What will it look like 5 years from now? It's going to be more than 11 trillion added. It's going to be like 15 trillion, right? So by 2030, we are on track for $50 trillion in national debt. By 2030, 50 trillion. Mind boggling, staggering. And people ask, well, why is gold going up? Why isn't gold going up higher? Is the question. Not why is it going up? I just answered why it's going up with these two charts. I mean, it's self-evident. And the Chinese, they are voracious in their hunger for metals. They love gold. Gold is the #1 performing alternative asset in China this year. And it continues to trade at a premium in Shanghai. So, whatever, $40 an ounce, $30 an ounce, but it's trading at a premium to the spot price globally. That is telling you there is high demand for gold in China. I want to give you a story. So I was out west. I told you I went to Las Vegas. So when I went to Las Vegas, I spent a half day going to a few pawn shops, coin dealers, just because like Vegas is like pawn shop capital, right? Because the gambling, and a lot of people lose money gambling and then they pawn off any valuables they have to try to get it back. It's a sad. There's even been football players, former professional football players who played in the NFL, pawning off Super Bowl rings in Las Vegas because they needed money. So they sold their Super Bowl ring for whatever, 30 grand in cash, so they could go gamble at the casino or pay their, hotel bill, God knows what. But it's kind of, like Vegas is like the full spectrum of life, right? You have beauty, you have abundance, you have this amazing place that was built in a desert, and then you have really sad scenes, sad stories, people really down and out on their luck. It's the full spectrum of the human experience, right? But anyway, pawn shops. So I went to the pawn shops, I went to coin dealers, and all of them said the same thing. People want to buy gold. They're coming in, they want those Costco Pamp Suisse 1 ounce bars. All the pawn shops are sold out of those. They can't keep them in stock. If they get one, they sell it immediately. They sell it at a $200, $300 an ounce premium immediately. And they're selling Krugerrands, right? Which are like, the #1 is the American Eagle, and then the Canada Maple Leaf, and then there's a few other ones, and then like sixth or seventh down the list in terms of gold bullion coins is the Krugerrand from South Africa. It's not considered to be very special. Um, and generally, if you go to a coin dealer and try to sell them a Krugerrand, you're lucky to get spot, and usually you get 20 or 30 back of spot because it's a Krugerrand. But if you went to sell them an American Eagle, they'd give you over spot because they can sell it for 100 or 150 over spot. So they're still making a big spread, even if they pay you 20 or $30 over spot, right? Well, anyway, they're selling Krugerrands for $2,600 an ounce. Spot's 2340 or something. They're selling Krugerrands for 10% over spot. And I just thought, the first place I went to, I thought, oh, this is just a ripoff. They're just taking advantage of the fact they're a popular store. No, all of them. You can't get an ounce of gold in Nevada for less than 2,500. Not even, I didn't see one less than 2,600. And forget about platinum, right? Platinum spot is, I don't even know off the top of my head, 950, 960. Try 1,300, 1,300 an ounce. That's what you're paying for physical platinum. Silver, $40 an ounce minimum. And if it's slabbed and like a nice case, it has a good grade, you're paying over $100 an ounce for a silver dollar, just a basic common year silver dollar, right? It's expensive. The metals are expensive. You cannot buy anything at spot. No, nowhere near spot, right? So this is not just a Chinese thing. This is a US thing when we're talking about physical. There is a big gap between physical metals prices and paper, metals prices, because really the paper at this point is just a trading vehicle to quickly buy and sell large amounts, but you can't get the metal, right? With the ETFs, you can't get the metal. They say you can, but you can't. The futures, well, that's a whole nother ball game. And not everybody has like $1 million in their futures trading account to settle a contract and actually get the 400-ounce bar, right? So if you want to buy physical gold in amounts less than 100 ounces, you're paying a big fat premium, right? Obviously, if you can buy a 100-ounce bar or 400-ounce bar, you're going to get a better deal, generally speaking. But then what do you do with a 100-ounce bar? You're not going to go shopping with a 100-ounce bar. People prefer the smaller amounts, the quarter ounce, the half ounce, the 1 ounce, because it's more practical, right? It's more practical way to store some of your wealth, and preserve some of your purchasing power. So anyway, that's enough on gold and silver. But this is not just a Chinese thing, okay? This is a global thing. Physical metal, big, big premiums. And that's telling you a story, and it's a bullish story. Another thing about China, a lot of people don't realize, is the Chinese debt burden in some ways is even worse than the US. So, total private and public debt to GDP in China is at 312%. So that's total. That means there's a lot of private debt. Total private and public debt to GDP of 312% compared to 247% in the US. So China's debt bomb is even worse than ours. And then the geopolitics and whatever's going on with Taiwan could put the screws to China even more. And how does any government get out of a debt crisis? They devalue their currency, right? They devalue their currency. The currency is always the outlet for the debt pressures. It's always the, valve where, okay, we're going to devalue what we owe. The people who own the debt get screwed when there's a devaluation. And so that helps to explain what's happening in gold and even what's happening in copper. There, people want to diversify out of holding a bunch of debt, a bunch of credit that could go bad or could be worth a lot less. And they want to return to that hard asset. The hard asset's the real timeless store of value. And so gold is the anti-debt. It's the non-correlated asset that's accepted and understood worldwide with no counterparty risk. And it is what investors flock to when they have less confidence in the status quo of the financial system and just the world. I mean, just everything that's happening in the world, whether it's Ukraine, Russia, China, Taiwan, or Iran and Israel, Gaza, US presidential elections. I mean, you could go on. Just look at what's going on in the world today, right? There's a lot. There's a lot out there. Um, The main store of value in China, housing, is still falling in price, encouraging gold demand. Okay, this is from UBS. Now, another flip side of this thing in gold is that gold has risen recently while these Bitcoin ETFs have received $53 billion AUM of assets under management, 53 billion. And gold ETFs are either basically flat or slightly net negative in terms of outflows in the last couple of months. Um, that's a powerful story. The fact that gold has risen when there have been net outflows in the ETFs in North America, and all this money has poured into these Bitcoin ETFs. The Bitcoin thing was aggressively front run by big institutional investors, and they have taken profits into the retail uh, flows. Here's just some more from UBS: 7 key reasons for staying overweight gold, and I think this is a very important one. We see the macro headwinds becoming tailwinds. So basically, the Fed is going to start easing, and they might even start soon with the tapering of QT. Um, and also, gold is nowhere back to its old highs in real terms. Gold would need to rise another 40% for that to happen. So that's how you get into that $3,000 target range for gold, is actually going back to the either the 2011 high in real terms or the 1980 high in real terms. So there is definitely still upside, but the main takeaway from the UBS thing is they pound the table on gold miners, saying they're very cheap relative to the current gold price. They throw out a few Barrick Gold, Endeavor Mining, et cetera, et cetera. Whatever. But I mean, of course, they're right. If gold stays 2350 to 2400 for another 3 or 4 months, the gold miners have no choice but to go up more. Okay. Um, and then GLD call positioning. So normally, when you're having like this run on physical and these premiums in Shanghai, you would think there would be some speculative froth in options markets, like people buying a bunch of call options on the GLD, speculating on a bigger move. But look at this. There's no froth at all in the options market. There's none. So this tells me we're not at a top yet. This is not indicative of a top. Um, I mean, just even last year, May 2023, we got a little we got a little hot in terms of calls to puts, but and definitely 2012, this proved to be a major sell signal. But we're nowhere near frothy. Okay. And then this is sort of the icing on the cake. Just gold as a percent of global assets under management, flatlining since 2021. Flatlining. Hasn't even moved. Hasn't even moved. And in the US, it's net down. It's slightly downtrending, right? Nobody owns gold. Big institutional investors, high net worth investors do not have significant gold allocations. So just for this to tick up back to the 2020 peak, we're going to have a much higher gold price, in my opinion. We talked about this, the physical demand, and then I think this is the sort of icing on the cake, is that decarbonization and deglobalization are both inflationary. So 3% is the new 2% in terms of CPI inflation. Just I think that we're going to see the central banks sort of wave the white flag and give in on this matter very, very soon. That and so when you have central banks essentially raising their inflation target levels and easing at the same time, you couldn't ask for a better combination for a higher gold price. Okay, and that's looking like what's about to happen. The silver chart to me looks exactly the same as the gold chart. Everything I said about gold, I can say about silver. The GDXJ daily chart, this is a bull flag. This is very constructive. This is bullish. I see no reason to be negative on gold miners at this point in time. AEM caught an upgrade from TD today, $78 price target in the US. And you can see it is really strong. It's consolidated. They had great earnings last week, consolidating at the highs, bullish. Newmont had that good earnings report last week, that big 12, 13% up day on Thursday. It's pulled back a little bit, but this is still very bullish. Buy the dips here. Philo mining. This is a beautiful uptrend consolidation. And this is a great way to play copper. Um, really, leverage to copper. This is a very bullish chart, and it looks like it is breaking out. Oil services. Okay. So first thing about oil services, the OIH, is I like this chart. I like how it's consolidating right above 320, rising 50-day moving average. Sort of, this is almost a textbook 50%, retracement of this entire February to April move. Textbook, like 50% boom, bounce, consolidating. You could see this is like an ascending triangle that's forming here. Um, I like it a lot. I'm long it. The sector is cheap on valuation, multiple basis. We're talking about 10 to 11 times earnings with growth. So this is a value sector, quite frankly, right now. And just from the near term, so if you're an investor, you can buy Halliburton, you can buy, Schlumberger, pack it away, get a dividend. I think you'll do well over time. But near term, seasonality is very positive for the sector in May and June. So we're just getting into the sweet spot of seasonality, summer driving season, and look at gasoline stores under average for this time of year. So normally we see a little bit further of a drawdown into May and then building back up again. Okay, so it'll be interesting to see how this plays out, but May and June are often very positive months for the oil sector, for the price of crude itself, and for the oil services stock. So this is kind of right here in the sweet spot. It came right back into a sweet spot level, and I like this one here. Kinross, these guys will report earnings next week. Right now, according to the guidance they put out in February, they're making a $1,000 per ounce margin on the gold they produce, right? So 2.1 million gold equivalent ounces per year, $1,000 per ounce margin all in. You can do the math on that one, then take a look at their market cap. I'll just leave it there. And then uranium. So Cameco has formed this little diamond pattern in April. I like this little diamond pattern consolidation. Volume is trailed off a little bit. I like this as a bullish setup, and I would buy the breakout from this pattern if it happens later this week. Another one, CanAlaska. I think I mentioned this in last week's video. I like this falling wedge. This is also set up. So this doesn't mean that I'm forecasting a breakout, but what I'm saying is if it breaks out from this wedge, I like it as a buy. So the falling wedge breakout, let's call it 63, 64 cents. If we get a breakout through there on some good above average trading volume, I would like to be long for upside to 80 to 85 cents. Okay, near term. We're going to get assays from CanAlaska in the next couple of weeks from that Pike zone, sort of confirmation of what we think we know already, and then they will resume drilling there in June. So I think the stage is set for a move higher in CanAlaska in anticipation of drilling. All right, so we'll just leave it there. Crude in an uptrend, and with copper roaring. I mean, as I'm doing this video, copper holy cow, 464. I mean, this is just a beauty. Copper is crushing it. Crude should also rise in sympathy. All right. So, junior miners. So yeah, the first part of the video is complete, and now we finish up with some juniors and some commentary on my trip. So Snowline closed $31.9 million financing and announced they acquired 100% of the Einarson project in Yukon territory. This is an orogenic gold deposit. And I like it. I like it a lot. And I think Snowline likes it a lot. the Jupiter zone. Look at these drill intercepts from 2021. So Snowline previously had 70% of this, so they acquired the other 30%. I think they gave them 1 million shares and some cash. So overall, maybe it cost them $6 or $7 million. But this has the potential to be a world-class gold system, right? Just based upon these three intercepts that they drilled out. So there's a lot of room for them to expand this Jupiter zone, and I expect them to allocate a significant number of meters to Jupiter this summer. And so when you think, well, Snowline's all about Valley. No, it's not just about Valley now. It's also about Jupiter. It's about this whole property package. So if they can prove this up to be something really nice, like multi-million ounces, high grade, the scale here is almost unmatched. Okay, this is big. And I know there's no infrastructure. We all know there's no infrastructure. We know they have to get permits. We know all that. But this is something that a Newmont or a Barrick almost could not say no to, if they're able to prove up yet another big, gold deposit on their property packages. Okay, so I love the news from Snowline, and I love the fact they've got like 70 million in their treasury. So it's going to be all guns blazing this summer, in the Yukon. American Eagle Gold, AE.V. So they announced $5 million private placement. This is not a huge shock. They have 5 million already, but if they do what they say they're going to do, they're going to spend that whole 5 million by the end of the year, and they'll be left with nothing, right? 15,000 meters, possibly more of drilling, a half year of corporate overhead, yada yada yada. So raising another 5 million, topping up from a position of strength, which is what they're doing. Just it's a smart move. And yeah, the share price dropped from 70 cents to 63 cents, 10%. But that's noise. That's one day. And at the end of the day, the company has to manage for the long term. They can't manage the share price day to day. And putting this extra 5 million from existing shareholders, right? So they're not going out and adding people who are just going to dump the stock straight away. These are people who want to build a bigger position in American Eagle. Again, they're raising from a position of strength. The market wants them to do this and let the market gyrate in the near term. Bigger picture, this is the right move, and it's bullish as it gives them the flexibility to increase the drill program this year if they're having good results. And it will make sure that come end of year, come Christmas, their treasury is not empty, and they would put themselves in a compromising spot, right? So you want to raise from strength. You don't want to raise from weakness. So I give full vote of confidence to this move by the American Eagle management team. And we should get. They did a webinar last week. We should, like, once this financing closes, we should get the IP results, and then we should hear about the commencement of drilling shortly thereafter. And then it's just going to be news flow all summer and fall, because they're going to be using 2 rigs this summer. So we'll get more assays and probably faster than we did the last couple of years from AE. All right. So that's that for that part. Here's the second part of the video. I was traveling the last 10 days. I went to Arizona, Phoenix, went down to Tucson, visited Intrepid Metals, Corral Copper, the OK Corral. It's not Coral, it's Corral, and the Tombstone South projects in southern Arizona. So I can't say everything that happened on the trip in this video. It's just not possible. But I'm going to get to the salient points. So, number one, I like the company. I like the management team. I like the CEO, Ken Brophy, um, experienced, shrewd operator, good steward of capital. Um, I like the projects. There's 3 projects. I saw 2 of them. Uh, you're talking about 10,000 acres in southern Arizona, and this is more brownfield. Okay, this is not greenfield really. Maybe Tombstone South could be a little bit of a greenfield type of project because there's not. I don't think there was ever a big mining operation there, but mostly it's brownfield. And they have 1,800 acres of private patented land where they hold both the surface and the mineral rights to it, right? So I like that a lot. I like private patented land in Arizona, brownfield where there was some historic mining operations. That that's a big check. Tombstone South is just sort of a go big or go home. So this is the share structure. I'll say that the market cap is not cheap per se. At 90 cents a share, fully diluted, you're talking about a 60 million Canadian market cap. So that's not cheap. But when you dig into the quality of the company, the quality of the projects, you start to understand why it's valued up there. But there could certainly be some volatility in the market cap. I mean, I could see it maybe trade as low as 40 million. I could see it trade as high as 100 million based upon what I know now. But that could change based upon the assay results and 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 more information coming to light. So great place to do exploration because this is a place where you could get a mine permitted. So that's number one checkbox. When you're looking at an an exploration project, you want to ask yourself, number one, can this get permitted? Is there any fatal flaw in this location in terms of the stakeholders, the locals in the area? That would be a deal breaker for this one. And the answer is no, based upon what I saw. Okay, this is an established mining region of Arizona, extensive history of exploration, and obviously small scale mining in the late 1800s and early 1900s. So they have a Holiday Herb and Ringo Zone. This is a 3-kilometer trend. And this current program is mostly with the aim of confirming the historical drilling. Okay. There might be some new stuff here. I don't know. Um, but the main thing is confirming some really good, results that they don't have the core from that were done in the 70s or 80s. Um, and you can see, I mean, you could see like 1% copper grades, 0.52% copper grades, and it's multiple metals. So it's not just copper. We're talking about copper, gold, silver, zinc, and there's even some lead. I'm not sure they're going to count the lead, but we're talking at least 4 metals here. So most likely when Intrepid does report their results in the next week or two, it's going to be copper equivalent, but they're going to break it down with each metal, right? And if they're able to confirm what we're seeing here in these numbers, it's a very good starting point, right? 3 kilometers strike extent and lots of areas to be filled in and also tested at depth, right? So it's open, lots of room for improvement here. Um, so if they're able to tie these together and they're able to step out further and extend the strike extent and extend it at depth, the scale is quite considerable. Okay, the potential scale is significant. Okay, Tombstone South is the blue sky target. This is a totally separate project than the 10,000 acres that we were just going through at Holiday, Earp, and Ringo. So Tombstone South is a deeper Taylor type of target. So it's CRD. And I think this one explains it best, that the historic holes, so there's historic holes here at this Robber's Roost, that was just completely, there's a fault in between here, right? And they drilled a deep hole and they found a porphyry, but it's a low grade porphyry. We're talking about 0.1 or 0.2% copper. It wasn't that interesting. Then there were some, holes drilled by previous operators on the Tombstone South side of this fault, but they didn't go deep enough. The key is you want to get into this contact with the Paleozoic limestones. And you see this hole didn't go deep enough, and this one just touched, but in the wrong area. So nobody went to actually drill where Intrepid would like to target. See, here's the other holes. Here's the fault. Here is their deep chargeability target, right here. So this is sort of a home run type of drill target. Um, they have the permits. They know exactly where they want to put 2 or 3 holes. It's just a matter of when, the timing of it, because we're talking about probably 900-meter holes here, maybe even 1,000. I mean, if they like what they see, they're going to keep pushing it deeper. So just assume $500 a meter US, right? So $1 million, minimum, and really you want to give yourself some space. So budget 1.5 million, right? So the 1.5 million, that's a consideration. You do the exchange rate to CAD, that's 2 million, and then it's a go big or go home sort of target, where if you tell the market you're going to drill it and you drill 3 dusters, then a portion of your market cap might get knocked off, at least for the amount of cash that you outlaid for the drill program, but also it gives away some of the inferred blue sky from the property packages, from the 3 properties that they are currently, um, talking about, right? So there's a risk, there's a downside risk, there's a timing aspect to it. When do you drill it? Like, when's the right time? You probably want to have momentum from the flagship project, from what you know, and a stronger treasury. So that could be 8, 10 million, so that you could allocate 2 million to going for a home run target, and it wouldn't kill you if you came up snake eyes and missed, right? I like Intrepid. I'll just leave it at that. Definitely highest of the highest market cap of the 3 that I saw. So I wouldn't say it's an A plus speculation just because of that. Um, a double from here is still a big deal because of the market cap. If it was at a 10 million market cap, it would be my number 1 pick of these 3 companies. But when we're talking about 50 or 60 million, it's already priced in some good news, right? Next up, VR Resources. So this is the new Boston project in the Walker Lane trend. CEO Mike Gunning, very sharp, experienced operator. Really enjoyed both him and Justin, the VPX. Uh, both very sharp men. I learned a lot from both of them. So this is the setting, right? Like here's I-95. This is the town of Luning. So little history. This was a mining town. In fact, it's only been a mining town. And there was a reason why Highway 95 went right through Luning. It's because of mining. Okay, so the mining guided the placement of the modern highway. Okay, but Luning is a little tiny town with nothing going on, and New Boston is a few thousand meters outside of town at elevation. So, first question, can this get permitted? Can it be a mine? The answer is a resounding yes. From me, from what I saw. You're not going to bother anybody. Okay. And in fact, they'd probably love to have a mining operation employing a few hundred people here, and they would build houses. They would build more houses down by the town. Just my dream, of the future. Um, You have the classic porphyry setting, stockwork veins, sheeted veins, porphyry dikes with stockwork copper veins. You have this blue ribbon skarn. There's even a silver lead zinc, high grade, silver lead zinc called the K mine over here. You can go through the deck on your own, but the setting is just beautiful. It's a textbook porphyry setting. Okay, so everything that you'd look for to see that there is a porphyry there is present and visibly, uh, clearly evident. So this is where they're drilling this east zone right now. A lot of the historic operators. So there were three previous operators: Bear Creek, 1960s, Conoco, 1970s, and then Newmont was the final holder of the project. And then when they formed the JV, oh, sorry, no, different story. 2013, they bought Pilot Gold and they immediately dropped the project because Pilot Gold had done sort of a condemnation, drill program in 2012, um, just testing a few areas, and they just chalked it up as a moly, deposit. They weren't thinking porphyry copper at that point, and Newmont said, moly, not interesting. The grades aren't that interesting, and we don't like moly, so just drop it. Um, so it was sort of dormant for several years, and then VR picked it up in 2017 for $15,000 and a 2% royalty that can be bought down to 1%, right? So, when I looked at this last week and he told me he got it for $15,000, I said, man, I would have picked up this project, and I'm not even a geo, at that price. At 15,000, it's a steal. Obviously, you have to pay your claims dues every year and everything. It's not a freebie, but um, great project, great project. Um, and the work that these men have done, the VR team has increased their odds, in my opinion, of actually finding something that could be economic at depth. And I think the key aspect of this visit was to see the scale. I think that was number one. To see the location, that this would be an ideal location to build a new copper mine, just based upon the highway, water, power, its proximity to places like Reno, even San Francisco, um, Tesla's factory near Reno. Um, yeah, I mean it's all here. It's all here, and yet there's nobody really living in this area. The little town of Luning, where there's nothing going on because there's no mining there anymore. Um, and where's that slide I wanted to show? Okay, so their interpretation is is really key because the the geophysics work that they've done is all pointing to a common source of what was historically mined near surface and what is showing up at surface. Copper oxides all over the place at surface, stockwork, sheeted veining all over the place at surface, molybdenum, which has been drilled in multiple holes over the last 60 years, and all of it is coming from a common source at depth. And so their first hole is an angled hole at the east zone, testing the conductivity, anomaly at depth. And it makes perfect sense where they're, drilling it. Um, and all of their graphics, help to explain it as well. Let me go back here. Yeah, and so they're planning 2 holes testing this target at the east zone. So this is hole 1, and then hole 2 is approaching it from a different pad at a different angle. So their theory is that these 2 holes coming at it from 2 different angles will give them a lot of information, a lot of information. And I'm not sure that this third hole at the Jeep mine is set in stone. I'm unsure of that. Um, I wouldn't be surprised if they like what they're seeing in these first 2 that they put in a third one here, quite frankly. But that remains to be seen at this point. Um, Everybody was focused on the molybdenum, okay? And what's interesting about moly is that, in the last couple of years, it's traded between $20 and $40 a pound. I think right now it's near 30 a pound. So that makes it 7x, like 6 or 7x the price of copper. And if you look at some of the, historical grades um, from Bear Creek and Conoco, they were drilling 0.08%, 0.14% moly. And if you go 6x 0.08% moly, that's 0.48%. So that's like a copper equivalent grade of 0.4 to 0.5%, which if we're talking about 100 plus, meter, intervals, you're starting to get something that could be economic even today, right? 0.1% moly is a very good starting point. And when you throw in uh, even 0.14% copper, certainly 0.25% copper, and then a sprinkle of silver, which there is here, 5 to 10 gram per ton silver, it's pretty widespread. You're talking about copper equivalent grades that could get to 1%, maybe even higher. Okay. Um, and this is from, I believe, Conoco days. Conoco didn't even assay some of their holes for copper, which is kind of crazy. They were just focused on the moly. Yet there are copper grades of 0.38% and 0.24% that are present here, but everybody was focused on moly. And then this is a conical hole from 1972, I believe, on the skarn over here on the western side of the project. 92 feet, so that's 30 meters of 1.38% copper. That's incredible, but this is a copper skarn. So the scale over to the west might be more modest than the potential scale that you have at the east zone. And I didn't see core. I saw the rig from 200 meters away. I don't know anything about the depth, where they are in the hole. I just know that they're still on hole one. Okay. And I just to reemphasize, strong evidence that the porphyry core, the heat source, resides at depth. And I asked, like, could this signature you're seeing in the 3D IP, could it be something other than a copper sulfides? Of course, it's possible, but the number one candidate would be copper sulfides based upon all the evidence that's showing up at surface and around this area. The number one candidate would be porphyry dikes bearing copper sulfides, right? So a lot of people ask, what grades are we looking for? What grades do you expect? I have no idea, but I know that if they're able to produce, let's say, 100 plus meters that look something like 0.3% copper, 0.08% or 0.1% moly with 5 to 10 grams per ton silver, you have something that could be valuable and could get the attention of a larger company. And I want to point out that across this valley, I don't know if I have, yeah, across this valley is Rio Tinto and Ivanhoe Electric. So you have big players sitting right across the highway, surely very interested in what VR is doing. All right. And yeah, I mean, and this is the Conoco thing, the 3 billion tons they did on 5 holes. It's a little silly because 5 drill holes, there's no way you could really infer 3 billion tons, but that is the potential scale. And obviously that is non-compliant to today's standards, but that's the potential. I mean, even 300 million tons in this location, if they're able to show something on the order of, let's say, 0.8% or 0.9% or 1% copper equivalent, you've got a home run here, right? So the risk of taking a shot at this thing with a few holes is worth it because the upside is that significant in my estimation. So big fan of VR Resources, big fan of my visit there. And I really left that day thinking that this is the one of the best drill speculations that I've ever come across. All right, I'll just leave it there. That doesn't mean they have to hit, guys. Okay, there's no guarantees in this business. Doesn't mean anything. Doesn't mean anything. Oh, what happened to my? I got caught up here. Okay, here we go. Last but not least, certainly not least, Ridgeline Minerals CEO Chad Peters was a gracious host. Beautiful wife and kids. It was a pleasure to meet his family. Really good guy. Just Chad is a likable guy. He's doing his best. He's doing his best every day, and it's a tough business sometimes. So this is their flagship project. We didn't go to this one. It's a little harder to get to. It's farther, and we already had a lot of driving. I love this one, and I love this graphic because this just looks like a freaking massive porphyry system with all the key characteristics of a uh, buried porphyry intrusion. Um, but Big Blue is what we looked at. And I like Big Blue because I like the name. But also, when Chad first told me about this in 2023 and showed me some of these diagrams, the maps, it just clicked. It clicked in my head within 5 minutes. Like, yes, I like this. Um, and so some of the key elements of, um, oh yeah, these are the stockwork veins that are near the East Zone at New Boston, but staying on point at Ridgeline. It's interesting because New Boston and Big Blue have some similarities, and one of them is that they were both projects held by Newmont at one point in time. With Big Blue, when Newmont combined with Barrick to form the JV in 2017, this project was dropped as being non-core and non-interesting. Newmont had drilled a few holes in the mid 2000s at Big Blue, but they were drilling in the wrong places, as often is the case, and they didn't understand what, Ridgeline now understands about everything in, in the setting here. Um, and the location is, where is it? Over here on the eastern side of the state, in what is now being interpreted to be an emerging porphyry CRD trend on the eastern side of the state. Okay, so that's no accident. So let's go back to Big Blue. So number one, it's 100% owned. 100% owned with no royalties on it. Number two, it's big, 41 square kilometers. It's brownfield, or at least part of it is. Delker mine. To call it a mine is funny because it's so tiny. It's basically, like an adit that they trenched, or they dug down, they tunneled down, I don't know, 20 meters. Not much. Okay, they barely got into the earth there. It's small, but they were able to extract 95,000 pounds of copper at an average grade of 6.2% in 1916, 1917. You can only imagine how hard it would be to get all the way out to where this place is in the middle of nowhere 108 years ago, and then extract 100,000 pounds of copper and bring it back to Carson City or something, right? Um, so Newmont drilled 3 holes, basically a condemnation program. Didn't find anything really interesting and just sat on it like a lot of big companies do until the new JV with Barrick said, no, dropping it. This is not relevant. It's not gold. It's not relevant. It's not interesting. We're dropping it. But the key thing to understand here is has the classic porphyry zonation, and the high grade copper skarn at Delker didn't just drop out of the sky from outer space, right? It has to do with the porphyry setting that exists here at Big Blue. And over here, you have Reyna Silver's CRD system, and a lot of nice high grade silver lead zinc holes have been drilled here in this area by Reyna Silver. Let's actually look. Yeah, so this is higher resolution over here. So this is the structural corridor that is now interpreted by Ridgeline. And the next order of business is to do a property-wide 3D IP over the entire Big Blue to really get a better idea of exactly where everything is and where they want to target. But I can tell you that most likely they're going to drill right along here in this porphyry corridor, um, where one line of IP that was done by Newmont shows a mag high down dip of Delker. And they're just drill across these porphyry dikes with a fan of 2, 3, 4 drill holes, testing it at various angles from the same pad, right? And that's already permitted. They've already got that permitted, so they're ready to go. It's just a matter of doing the IP, which will start probably in May, probably get results by the end of June, and then a decision will have to be made by the Ridgeline team whether or not it's good enough to be drill ready and then actually drill it. But all the stuff that you'd like to see at surface is present at Big Blue, and it's got the classic setting porphyry zonation that you'd also like to see. So in my mind, this is an A quality target. And the fact that Ridgeline, they're going to close the financing soon, so this market cap's going to be a little more once it all closes. But this is the lowest market cap of the three that I saw, and I think that Big Blue is just as good as New Boston in terms of the upside potential, and just a matter of, does the IP confirm the model, and is it time to drill, and then it will be game on, right? So anyway, I like all three projects. I like all three companies. Obviously, the valuations are different among the three, so the downside, risk is a little different for each of them, and the upside potential torque in the event of a new discovery is different as well for all three of them. But obviously, clearly, Intrepid is the most advanced of the three. Also has the most cash in its treasury of the three, and also it has the highest market cap of the three, and those usually all go together as well. But in the American West, what's old is new again. Thank you for tuning in to this extra lengthy weekly video. I appreciate your time and interest. And again, if you found value in this, please hit the like and subscribe button, and have a powerful trading week.